Gujarat Fluorochemicals is the next company in question. They're in focus as the company's subsidiary GFCL EV is raised 1,000 crores at an equity valuation of 25,000 crore rupees. Remember, Gujarat Fluoro's own market capitalization is about 50,000 crores. So this is a significant fundraise. Now, these funds have been raised from marquee investors, including family offices of some of the largest business groups in the country. Devansh Jain is Executive Director at InoxGFL Group, and he's joining us to take some questions. Devansh, good to have you with us here. Good morning. Prashant this side. Congratulations. It's a significant sort of development for investors in your company and for you as you look forward into this sort of emerging big business line. Give us some details, though, Devansh. So this is a 100% subsidiary of the listed entity in which you've gotten these investors in. 1,000 crores worth has been put in, and the company is now valued at 25,000 crores. So if you can confirm those details and who has put the money in, if you can give us some inkling, because I believe Sunil Bharti Mittal's family office is one of the investors, and we got some of the other large family offices, corporate family offices also in. So give us a sense.
Good morning, Prashant. Pleasure to be back. This time, not for the wind business, for the chemicals business. It's a nice day. It feels good. It's a new business which we're building out very, very aggressively, very rapidly. GFCL EV is a 100% subsidiary of Gujarat Fluorochemicals, where we are setting up one of the largest integrated battery chemical complexes outside of China. We have raised 1,000 crores. While I will not name the family offices which have invested, what I could certainly give you is these are some of the largest business groups across auto, across FMCG, across cement, across metals. So very, very strong pedigree guys across family offices which have come in. We've diluted close to about 4% of GFCL EV to raise this capital. I don't know how much everyone knows, but to date, we've pumped in close to 1,500 crores of equity into GFCL EV. And we have a large capex plan of almost about 6,000 crores over the next 2 to 3 years. And this capital raise, along with potentially another round, should see us through that along with our internal accruals.
So 6,000 crores capex over the next 2 to 3 years is the plan here. Another round of funding soon, a year out, by when?
Soon. We're talking to a few large private equity investors. We should be doing another round soon. And with that, I think we should be well covered. The aim is to raise about 2,000 crores, 1,000 odd we've raised from family offices. Potentially another 1,000 would be raised. And that, along with the 1,500 which we've already put in as equity, would be good enough to see through the entire business plan without any debt. I mean, as you would be aware, the InoxGFL Group is very debt averse. We don't like debt in any of our businesses. With this raise, along with the incremental raise, basically all the capexes will be funded from the equity and internal accruals. There will be no borrowings whatsoever across the group.
The business, though, just to kind of you're going to be making batteries, right?
No, so
putting
what
together
we make is basically it's 3 parts, right? We cater to the entire EVV and the ESS ecosystem. So it's battery chemicals, which is basically electrolytes, salts like lithium hexafluorophosphate, and various formulations and additives which go into the battery, along with cathode active material, which is LFP, and high-end fluoropolymers, which are used as binders, which is both PVDF and PTFE. In effect, broadly, the products which we make, depending on the chemistry, constitute about 40% of the battery. And the battery constitutes about 40% of the electric vehicle's cost. So in effect, we control about 12 to 15% of an electric vehicle's supply chain.
Okay. And this would be 6,000 crores, 2 to 3 years, building out what capacity? I mean, if you can give us a sense. I mean, so for example, when we speak with OEMs like Ola, they give us they're building out this gigafactory, right? I mean, they want to be integrated, and they're building out a large capacity over the next few years. So give us a sense of what, and they would be your customers. Who would be the customers here for you? I mean,
I think just to give you a little overview about the EV landscape, we expect the market to move from about 1,100 gigawatt hours to about 5,000 to 6,000 gigawatt hours by 2030, opening up a $300 billion opportunity. I think what's happening is with the Inflation Reduction Act in the US, primarily supply chain, 95% of the battery supply chain was out of China. And with the IRA, you've effectively cut off the entire Chinese supply chain. So effectively, the entire US market is ideally looking for a key supplier. And I think we fit right in. We are early movers. We've got a majority of the plants up and running. We've gone through multiple rounds of approvals. We are currently in sampling and final trials of our products across our commercial plants. And we expect to start commercial supplies from Q4 FY25. Having said that, I think what's also important is outside of China, there are only one or two small players in Korea and Japan, which gives us a very, very large opportunity to build out this business. While I won't specify exact numbers, but I mean, in LFP, for example, we're looking at over 1 lakh of tonnage. In LiPF6, we're looking at almost 30,000 tonnage over the next 3 years.
So Devansh, just to come in over there. So that's the thing that investors, sometimes grapple with, to try and understand specifically what would be the opportunity for an Indian company. And from what you're saying, it looks like obviously you're catering to the international market and domestic. So if you could give us a mix, how much of it will be international, how much domestic, and isn't there some concern about, while of course it's a big theme and it's here to stay, but isn't there some concern about a little bit of a slowdown in demand as well?
Look,
in the near term, that is.
Look, effectively, as I mentioned to you, the global opportunity is expected to play out from about $65-70 billion currently to almost $300 billion over the next 4 to 5 years. Currently, the supply chain is primarily China-driven. And with the Inflation Reduction Act, for example, in the US, it's banned. You can't be with the Chinese. Effective 25 and 26 for various products. That's where we step in.
No, but how much of this would you want to target, Devansh? That's the global picture we've got.
Let me just explain this to you. In Europe, what's happening is majority of the OEMs are moving away from the Chinese supply chain. So you don't have IRA, but they need to have an alternate. And I think that's where we fit in. Now, if you look at the size of the market, almost 55% of the market would be the ex-China market. So currently, maybe the total market, the TAM where we would be playing is about 40 billion, moving up to about $150 billion. At peak, we would target about 7% of the global market. So while you look at a slowdown, which is primarily India, India is very, very small in our larger scheme, and India is really going to play out from 26. Majority of the battery plants are getting in shape now. You'll have some capacities coming up next year, be it Ola and so on and so forth. It's too small. We're really playing the global markets at this point in time.
Okay. Hi, Devansh. Congratulations on this, big announcement. And you clearly seem very confident and optimistic about the future. Give us a few quick numbers, though. Out of the 1,000 crores, how much is the promoter entity putting in?
So the promoters have put in 200 crores. The remaining is coming 200, and the remaining is coming from, the larger family offices across India.
Got it. That's out of the way. Next up, what is the ROE you're expecting on this business? Currently, I think it's around 17-18% for GFCL.
Look, we would expect much higher than that, but I would not be able to. Talk about that at this point in time.
Point number 3, will you be looking at listing this business? That should be the eventual plan, say in the next 3-4 years?
Yes, certainly. I think as is known across InoxGFL Group, we build out businesses, capitalize them well, and once they're on their own, we eventually list them. So certainly for GFCL EV as well, we would be listing this over the time period you mentioned.
Okay, in the next 3 to 4 years. And this remaining 1,000 crores that you were talking about, a fundraise, will be done at similar valuations, and should we expect it in this fiscal year?
I would expect so.
Okay. Devansh, just one thing. You said this business is already up and running for you?
So all our plants, we've got our LiPF6 plant running. We have our electrolytes plant running. In this quarter, we expect to commission our LFP plant. So these are all commercial plants. I mean, it's a very, very rigorous approval process. You'd have a pilot plant, then you have a commercial plant. It takes a year from the pilot plant, then from the commercial plant, another 9 months or so. We've got sampling done, validation going on. As I mentioned, Q4 is when we expect to start commercial sales of most of these products.
So FY27, right? What roughly? I mean, just to give a sense of what we're looking at. What could revenues be?
In excess of $1.5 billion.
From the EV business.
That's right.
Okay, FY27, $1.5 billion in revenues.
On an investment of 6,000 crores.
Well, the investment will play out. So that would be for the larger top line.
Okay.
The turnover ratio we would look at about 2 times, but
2 times.
2 to 2.5 times. But effectively, 6,000 would enable us to supply,
12 to 15,000 crores.
And growing at what rate, Devansh? From there on, you mentioned those numbers. $150 billion TAM. You like a 7% share. So sure, I mean that's a very large.
But that's in 2030. Let's get there.
I know.
I think at this point in time, the TAM is at about 40 billion. We are ramping up. I think, as I said, with the equity raise we're doing at this point in time and the equity we've already pumped in, the internal accruals are large enough to keep growing that business. So, I mean, we're looking at abnormal growth rates for the next 3 to 4 years. And then they would peter down, but I think they would be fairly high even at that point in time.
Got it. All right, Devansh, thanks a lot for joining. Congratulations on this big announcement. We look forward to touching base with you as you raise some more capital and as things progress.